The markets put in a nice little bounce today. So what are we looking at as the United States gets ready for the Thanksgiving holiday? One more trading day before the Thanksgiving holiday, and then a abbreviated day on Friday. Maybe there will be some Black Friday sales for stocks on Friday. We'll have to wait and see, but markets will close early. So a short week, low trading volume. A lot of investors have already checked out for the holiday. So not a whole lot of news, but just, markets green today, 1.36 on the NASDAQ, 1.36 on the S&P, 1.18 on the Dow. As bonds, we'll take a look at that in a minute, ended up a little bit down today. The dollar backtracked a little bit, backing off of their initial climb from yesterday. So right now, the optimism, Treasury yields are slipping as investor attentions turn to Fed speaker remarks. And basically, a couple of the Fed members were coming out saying, we've had some good news on inflation front, but we need to see more good news and sustain good news to make sure that we are returning price stability as soon as we can. A couple of the other Fed members, let's take a look at this here. We're talking about backing off the target for interest rates into the 4 to 5% range. And who was that? That was Mester, I think it was, that came out and was talking about that. As ever, though, investors should cautiously monitor developments as faithful execution of reopening plan will likely be key to investment outlook, talking about China's potential to be shut down. And the Cleveland Fed, Cleveland Fed President Loretta Mester said in a recently that inflation data is promising and that she'd support reduced interest rate hikes going forward. That could mean the Fed gets to its terminal rate between 4 and 5%. That's a huge weight off the shoulders of investors that have been absolutely nowhere to hide this year. So what's really driving this today was earnings. We had some really good earnings reports. So none of this is good news for the Fed. The markets have rallied a little bit. Earnings are strong. Labor market is strong. The consumer is resilient and continuing to spend, which is going to keep inflation up and potentially higher than what the Fed wanted. And other Fed members have come out and said, we're going to, increase our rate ceiling higher than what we initially thought, longer than we initially thought. So right now, this is a nice little rally off of good earnings. Bob Iger coming back to Disney. A lot of good news in the markets right now, but this could all be given back tomorrow because the last time we had good earnings, the market rallied. Then the Fed came out and stamped that out because the market realized, wait a minute, if earnings are good and the labor market's good, that's not good news for the Fed. So tomorrow could be a turnaround day. This is Bitcoin here on the daily. We're going to take a look at the Dow. Nice little rebound for the Dow today. NASDAQ up, S&P up. But here's the issue that we're facing. The Dixie had a nice little rebound yesterday, withdrawing a little bit today. The 10-year backing up a little bit today. Still up off of that bounce right here on, the Dixie bounced right off of that 200-day moving average. So that was interesting right there. But here's the big thing here. The VIX is not giving a lot of confidence to the markets. The VIX is at 21, approaching that 19 level. And we know what happened the last time the VIX was at that level. That was in August. And if you remember what happened in August, this was August right here when the VIX hit that 19 level, and then the market just gave everything right back up. So is that what we're looking at now? That's what seems most likely and probable. That's going to kill this bear market rally, is that 19 to 20 on the VIX. All the investors are watching that. So we'll see. Tomorrow could be a little bit of an unwinding of that, maybe a little bit more selling on Friday. Markets do not like to go long into holiday weekends. And then we will resume the march and debate, resume the march towards the debate of 50, 75. What's the Fed going to do? With all the great economic data coming out, the Fed might be inclined to go 75. If that's the case, the markets will work for their next leg down. This is Bitcoin in the daily, still looking kind of boring here on this level, rolling over to a new low, bouncing off of that. We had some short liquidations here. Looks boring on the daily. Let's look at the hourly. The hourly had a little bit more action, nice little short liquidations here, and that was across the board. Bitcoin, Ethereum, XRP, Cardano, Solana, pretty much everything across the board. It's all the same stuff. These are programmed reactions and liquidations. The key to watch, as we've been watching, is level after level after level. Now it gets a little bit tighter. Level after level after level. So this is basically what we're looking at, is that it's just a steady, continuing, unwinding, repricing, level to level. So the question is where, whoops, let me get rid of that real quick. The question is, where is the next level going to be? And we've looked at this recently. It could be in that 12 to 13,000 range, but right now the price is bouncing in that 15 to 17,000 range. So basically 15.5 to that 17,000 range is kind of where price is rolling around right now. Definitely put in a new low, invalidating this potential low here and the potential low that a lot of people were calling for back here when price put in this 18,900, but wicked low to 17. A lot of people were calling this the bottom of the market. And obviously we have put in a new low range that could potentially run sideways here for some time. As we looked at yesterday, on yesterday's video, that this whole thing took about a year to actually reach bottom from December 17th, 2017 to December 17th, basically, of December 18, and then it ran sideways for about 3 months after that until March, April. So could we see that here? Maybe some potential more downside, moving sideways. I think that's mostly what is likely going into, like we talked about, Q1 of next year, to really kind of figure out, obviously, what is the Fed going to do in December? That's a big one. What does the market look like? What does liquidity look like? And what are we going to be running into beyond that? The other thing to look at is the Fed pivoting. What does a pivot look like? Is it a slowdown next year? If they do, a lot of analysts, a lot of economists are projecting a recession. The question is, how deep is it going to be? How long will it last? What's the Fed's reaction going to be to everything? And if the Fed has to pivot, meaning there's two different kinds of pivots. One is to stop raising interest rates. That's not really a pivot. That's just stopping raising interest rates. But then there's still the QE component and QT component. So the Fed is doing QT and they're raising rates right now. So they have two things they need to do: stop raising rates, stop the QT. And then what put these reversals in the past, when we look at the markets, traditional markets, let's go ahead and look at the S&P here real quick. In the past, this was not a Fed, pivot necessarily. This is the Fed juicing the market with QE. So not only were they dropping rates, but they were juicing the market. 2018, same thing. That was a pivot of dropping rates and juicing the market. 2009, this was a liquidity-driven, dropping interest rates and juicing the market, versus just dropping interest rates and backing up on that. So there's a big difference between plateauing, slowing, reversing, and then juicing the markets with QE. Those all have a huge effect and a big factor on the markets in terms of returning to some sort of a nice bull market rally or something like that. So a lot of risks out there still to be aware of, and we will see what the rest of the week holds, and I will see you on the next video.